Sean Udall, how you doing this morning?
Well, I'm on fire.
You're on.
I like that.
I do have to tell you, when we were talking about Twitter and the earnings came out when I was gone, and he sent me an email, and it was Twitter, and
Yeah, it
now,
was Twitter.
yeah. I hope you don't mind me sharing that, Chris. But so let's talk about FireEye here.
Sure, sure. Are we on air?
Yes, you are. Yes, you are.
Okay, perfect. Yeah, well, even better. So here's the deal. I laid out a pretty good case on fire a while ago. My assertion was that their last earnings report was actually a really good earnings report that either everybody hated or they just didn't understand. And so what happened is I kind of came into this quarter thinking, if they just do the same thing as last quarter, I think the stock will react positively. If they have a quarter that's just a little bit better, I think the stock will react even more than positively. Excuse me. I think that's exactly what they did. By the way, it wasn't a great quarter. I think people are still trying to get their arms around the fact that they're moving fast to a subscription model. So it's more of a billing story, future cash flow story, stuff like that, right?
Can you
It's
tell
not
us
super,
exactly?
it's not like
Tell us
data.
exactly what they do.
Oh, go ahead.
Tell us exactly what they do.
Oh, exactly what FireEye does?
Yeah.
Well, they do a lot of things, but the main thing they do, that really are two things. One is they have a much better software package, in my opinion, that they install at companies that helps detect, virus and malware intrusions, right? Hacking, identity theft, all that kind of stuff. The other thing they do, and it's a company called Mandiant that they bought, is they're really one of the few companies that can send in a team of people to a company after a major security breach and basically go through the whole IT infrastructure system of a company and figure out where the weaknesses and holes are. So, and that's called deep forensic, security analysis, right? So, that's it. I mean, and then there's tons of other pieces and products and stuff that they sell. I think what it really comes down to me is, and what they're starting to prove is they have I guess I would call it an almost complete suite for a security IT solution, where a lot of other companies sell bits and pieces of it. One company might really be good at network security. One company might be good at email security. One company might be good at, some kind of firewall security. You're kind of getting the picture, right?
Yep.
What FireEye has tried to build is a company that kind of addresses the whole package.
And taking a look here at the or after hours trading here, I mean, when you see that spike down under $32, you just close your eyes, or are you out there trying to buy more, or do you just?
I tried to buy more. I mean, it wasn't there very long. I tried to buy more. I missed it. By the way, Twitter did the same thing. There was some, for some reason, they saw something in the Twitter report. I don't know, but Twitter spiked down, I want to say 5%. For a flash, maybe you had 3 minutes to try to pick it. I still don't know why people tried to flash down Twitter. But FireEye has big headline losses. I think they lost, I don't know, what was it, 56 to 72 GAAP EPS. They beat non-GAAP EPS by like 11 or 12 cents. But the thing that crushes the bear case with FireEye, and this was the big bear case, is that the company was going to run out of cash before they were free cash flow positive. That has never been my assertion. I always thought they'd have a cushion of at least $200 million. And now I might even be a little conservative. I think they'll have a cushion of probably $250 million on their balance sheet before they get to free cash flow positive. So the fact that they're starting to burn way less cash per quarter, now people can see it. People didn't believe it before. Even though the signs were there last quarter, this quarter the cash burn was very minimal, and their guidance for cash burn looked a lot better. So, I mean, it's kind of an all-inclusive. Now, here's the question for people. I mean, you go out there and you buy it right now if you don't have any. That's a tougher call. You know me, man. I've been buying this thing when everybody else is getting afraid of it, and so. I have purchases as low as like $26 on this name. But I do, for me, it's a buy on dips. If you give me any notable dip, any notable pullback, just like Twitter gave people a pullback for a couple days, it was viable. That's how I'm going to play it. But I do think the stock can trade a good, 15 to 20 points higher than here if you give it a reasonable time frame. Let's say 2 to 3 quarters or more.
Yes.
I still think it has 40, 50% upside.
So you're not letting anything go here on the gap and
I actually sold a little pre-market because I bought quite a bit yesterday, and I wasn't going to buy any yesterday because I had a decent amount coming in. But I read 3 negative notes yesterday, and they were just stupid. They literally were 180 degrees wrong, and the stock was down about $1. And so I actually almost doubled up my stock position, but I bought some puts. I basically did what's called a married put play.
Explain that. Could you explain that, please,
Sure.
in detail?
Yes. So I bought common and I bought puts to protect. So, and I wasn't really worried that I was going to be too wrong on this, but just in case, there's always a chance, you're going to be wrong. So I was fine. I'm like, if it goes to down 2 points, I don't really care. So it was trading a little above 35. And I said, if it goes down 2 to 3, I don't really care. So I bought 32 puts, and by the way, the 32 puts were really cheap. I think I paid 70 cents for them. So I basically doubled up my stock position. On the shares I added, I bought 32 puts for 70 cents, and the stock's up 294 right now. So that was a pretty good trade. I'm going to eat 70 cents, but the stock's almost 3. I sold a little bit just basically to kind of take some off the table. Anytime you get an 8% move in one morning, I'm always going to trim something. I'm basically a buyer on any kind of mediocre, $1 to $2 fallbacks. I'll buy those. I'll buy it back. And now I'm probably going to start. By the way, now I'm going to start probably looking at 50 calls and maybe 50, calls of 3 months or longer in duration. And I think I'm going to hit the 50 strike price on it.
And do we have anything left on the earnings calendar, something that you follow closely? Kind of coming near the end of earnings season. Do we have any fireworks?
We are. In fact, FireEye was my last big boy. CyberArk is tonight. The problem is, here again, I was buying CyberArk around the last time we talked. The stock was about $7, $8, $9 cheaper, probably 7 to 8 cheaper. So I'm not that excited about it. I still think they could deliver a really good quarter, but it's going to be juiced up and it's hard to chase. I'm trying to think if Arista Networks is next week. That's another stock. That's a new stock of mine that I really like. They have a lot of controversy right now. I'm not being very aggressive on that yet because Cisco's suing them. There's some other issues going on with that company, but that's a new, good, high-growth, disruptive company I like. I kind of want to see the quarter before I do anything crazy on that. To be honest, I'd have to kind of look at the earnings calendar for next week because I was pretty focused on FireEye for this week. There is another company I like tonight called New Relic, which is sort of a miniature Splunk. And I'll be watching that. I'm not sure I'm going to do much in front of the quarter because it's a brand-new company. This is their first quarter as an IPO. And then Splunk. So that's the other stock I really, really like. Splunk, big data intelligence software company. One of my favorite companies long term. I was loading up on the stock in the spring of 2014 and kind of ever since buying dips. So they report, I think, in about a week and a half. So I actually, now that I correct myself, I still have one more biggie and it's Splunk.
Okay, and just an update on your Google position. I know that you really were eyeing that 540 level for your maximum gain. It looks like they gave you a couple shots there. Were you able to cash things out?
Yeah, but actually, that's still a call spread position. I'm still kind of milking it. I could take it now. It's decent now. But we'll see what happens. I'm still in it. As long as it's sort of between 530 and 540, now I more have a trailing stop on it. Probably would be the best way to say it. If it starts withering fast now, I'll probably be pretty quick to take it off. But 5 to 10 points. If you have a call spread, 5 to 7 points on Google doesn't affect it that much. I'm pretty comfortable unless I probably see it back below 530. By the way, I might roll it out. I might actually adjust it and basically sell my current positions and actually roll it out and up, which that means, I'm going to basically sell my current strikes, and basically I might move up 10 or 20 points on them. So it's a way to take some gains, some cost out of the call position, and then but still have similar exposure, but you end up having more upside for less money.
And what about Alibaba? Is that getting any interest yet? Been hit off earnings. Looks like it was going to crawl back, but now back down under $86. Is that something that's
Yeah, I can't say I'm negative and I'm leaning short on it anymore. I think it's probably close to a bounce. Again, I just don't love this name. I don't really like. By the way, look at Baidu. I mean, everybody's all thinking, okay, natural monopoly, blah blah blah. Oh, well, guess what? They can miss a report, right? So I'm just not, I'm just not a big believer in very many of these Chinese names. Now, I will say this again, Bob at 86. At this point, you got to be careful being short Alibaba, because on any given 3 or 4 day move now, they can move 5 to 10 points. I mean, it would not surprise me for Alibaba to make a move to 95. So I'm sort of watching Alibaba to try to see if I can take a tradable long in the name. I mean, after all, they're still relatively cheap on the metrics, So, from that perspective, again, I can't be negative on them here. There's still a lot of other names to trade. I mean, that's the thing. It's like, do I favor Alibaba over Twitter? No. Do I favor it over FireEye? No. Do I favor it over Apple? No. So, but at the same time, a trade's a trade, and investment's an investment. So, from a tradable standpoint, Alibaba now is starting to rank fairly good, because so many of these other names I've been talking about have really ripped to the upside.
And let's just, I know this, you probably don't trade it or look at it, but any take on Tesla here trading down under 200?
I don't trade it much. In fact, your guy Lewis has called me and we've talked. I have both a bull case and a bear case on Tesla. I think we've talked about, I'm not a big. I think Tesla has to win in what they are, which is an auto company. I don't believe Tesla is really like the next great technology company that a lot of stuff has been written about it. But there's a price, right? There's a price for everything. If they were to just absolutely annihilate them, if I saw Tesla at 165 to 175, there again, I'd probably have to get interested in doing something on the long side, because they are building the battery factory. They do have a new model coming out. I think that next model that they're going to produce is a mid-priced crossover model. I think it'll sell like just crazily strong, right? So I think they do have a couple catalysts coming up. I think the shorts can probably try to make some pretty good money on them, probably for the next 3 or 4 months or something. But then, as you get closer to some of these longer-term catalysts for them, I think the stock's going to start working higher. So, here again, I have to. Now, this is one I can sit back and kind of be a pure chartist, right? I can sit back and kind of watch it, and if I get a good early turn technical trade where it looks like it hits terra firma and just won't go much lower for a few hours to a couple days, then you start looking for, okay, hey, where's the crossing points? What are the break points? What do the short-term moving averages look like, and things like that. So, I would be interested in maybe trying to trade this on the long side as well.
Okay, 2 more before we let you go. Cisco taking off here this morning, trading up 236, beating the street here, trading down to 29.58. Kind of your old school tech stock. Any thoughts on Cisco?
Cisco's trying to bring old school cool back here. So, yeah, I'm surprised. Okay, this is a stock. They're sort of being disrupted around the edges. My thesis on Cisco is very similar to like my thesis on let's say a Google or a Microsoft or an Oracle, where a lot of these young new companies right now are doing some really crazy disruptive things and kind of hitting them. Arista Networks, which I just mentioned, is the one being sued by Cisco. Arista is doing so well and picking up so much business against one of Cisco's divisions that Cisco is basically, suing them to try to slow them down. There might be validity too. I can't speak to the legal validity of the suit or lack thereof, but big companies they're going to do what they're going to do to try to protect their turf. And But here's the thing: this was actually, I mean, I don't think the stock is up in a relief rally because the stock was really close to a 52-week high,
Yep.
which is also fairly close to a multi-year high. So this is, it's being rewarded for actually a pretty good quarter in a pretty tough market. Cisco definitely did better than I thought it was going to do because they have huge foreign currency headwinds, which they overcame. So I think that's the biggest reason, by the way, the stock's up at almost 9%, is because they still produced a pretty good beat on revenue, and the guidance was in line to slightly better, even though, all those numbers would have been anywhere from 4 to 6% better if they wouldn't have had foreign currency headwinds. So if you strip out FX hits, basically you're looking at a really big quarter from them.
Okay.
And Cisco, I mean, this could be a sign that, maybe the world isn't as dire of an economic shape as kind of everybody has led us all to believe. That's been one of my points, that I didn't see the recessionista thesis at all. I thought the global economic conditions were bottoming and probably going to be quite a bit better than people thought. So maybe Cisco is kind of pointing to a decent sign of that. But I mean, now you got to start looking at a long-term chart here. Microsoft did something pretty amazing when they broke, I think, above 36 or something. They basically went haywire and went almost to $50. So you have, Cisco, if they break above, in fact, Microsoft did go to 50. Cisco above 30 sort of sets up that you're breaking kind of long-term
downtrend
trend lines. You know this shit, right? I mean,
yep.
I don't know how high the stock could go. It's not one of the stocks I love, but there's no way I'd step in front of this thing here because it's still super cheap. I mean, this is a super cheap company on any kind of valuation metric, and you never know, they could go up another 20%.
Okay, we've been on the line with Sean Udall. He's the tech stock strategist, giving us his outlook on earnings. Sean, thanks for coming on to Last Second. We really appreciate your input, and we'll talk to you again soon.
You bet. Appreciate you guys having me.